Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you've ever wanted to know how a submarine officer can serve a mission first through acquiring real estate while living overseas, then guess what? Today is the conversation that you're going to want to listen to until the very last word. I promise, to the very last word, because today's guest not only looks to serve active duty and military vets by investing in stable real assets, he also wants to continue to acquire B and C class apartment buildings. He also has a very clear long distance investing focus in 2 states, Virginia and Georgia, and he probably is going to tell us about some more. And you know what? Even in 2020, listen to this. Even in 2020, acquired over 300 units and about an additional $20 million worth of assets under management. Yes, I did say that during 2020. He's currently on active duty, and he is the host of the Lessons in Real Estate Investing show. I'd like to welcome to the show, Anthony Pinto. Anthony, welcome to the show, man.
Billy, thanks for having me. It's that was a tremendous intro, much better than how I do my intros on my show. So awesome job with preparing all that. It makes you sound a lot better than I actually am.
Oh, dude, you're absolutely out there crushing it. And I'm super excited about it. And I'll make a quick correction. It's the Lessons in Real Estate show, and you know, I was a guest on your podcast a while back, and I'm really, really excited to have you here to share your story because it so fits into what we do here in the Going Long podcast, which is awesome. So I don't want to get ahead of myself. Here's the thing. As you know, Anthony, I like to ask everybody at least the same 5 questions. Everything in the middle could completely change depending on kind of how you answer questions, right? But let's get started off and just help people understand. And I'm going to change this question because I would like for you to tell us, where in the world are you currently living?
Sure, Billy. I'm currently stationed in Japan right now, Yokosuka, Japan to be exact, which is about an hour and a half, 2 hours south of Tokyo.
All right. Fantastic. And that is amazing because that's going to tie into where your assets are located, which I mentioned earlier, which is cool. And then what's the most positive thing that's happened to you in the last 24 hours, Anthony?
Most positive thing that's happened to me. Actually, it happened just about an hour ago. I was having a team morning meeting, which I'm 13 hours ahead of East Coast time. So for me, I'm about to go to bed, but for my team, they're getting up and starting their morning off. And so we have a morning meeting for them. And, we spend an hour going through, the day and we learn about stuff and we stretch, and it's a whole routine. And after that conversation, my director of operations got together with me, and we had a really great, awesome conversation. And, I was really worrying about a particular part of our business that was kind of very much out of my hands. Because one of the difficult things about being in Japan and really being in a foreign country in general is the time zone shifts are different. So I can only talk to certain people between the hours I'm normally sleeping. And so it's very difficult to try to have conversations with people during normal business hours. And so that was a very big concern with me on this particular issue with the business. But he had everything lined up for me. And in a 10, 15-minute conversation, he explained, hey, this is what we're doing from A to Z. This is how much it's going to cost, who's involved with it. And it was a super easy decision over something that was keeping me up, honestly, at night because I was really worried about it. So that was a really awesome, positive thing that happened just about an hour ago now.
All right, fantastic. The fact that you were able to actually get the information that you needed at a time that was accurate so that you could make the decision to actually be able to move your business forward, if I sum it all up. Awesome. Yep. Love that, man. And that is really cool. And a lot of us that we are interested in investing beyond our backyards and long distance, whether it's on purpose or because that's what life kind of threw at us. The fact of the matter is many times we're dealing with situations on time zones that are not during the quote unquote normal business hours. So thanks for sharing that, because it's also a dash of reality, which I appreciate that. So, and listen, I gave a couple of highlights to your story, and it's impossible to tell your entire story in like 15 seconds, right? So what I would love for you to do, Anthony, is really share with us, give us a little bit more about your backstory, kind of, what led you into this real asset world. And then also, like, how in the world are you in Japan, man? That's really cool. I know the secrets, but I don't want to tell it, right? So go ahead. Let us know. What's your backstory?
Sure. So, Anthony Pinto, originally from the Kansas City area, active duty, submarine officer. So I've been in about, 7 years. Oh man, time's flying. Almost 7 years now in about a month. And, I've been stationed in Norfolk. I bounced around in schools in Connecticut, New York, and down in Charleston. But the majority of my time was stationed in Norfolk before I came out here to Japan. And during my 4 years there, I was doing a sea tour, which means I was actually assigned to a submarine. And we were in shipyard the whole time, so it was pretty much like a shore tour. But towards the end of my sea tour there, this was the middle of 2018, we actually got out of the shipyard and we were going on sea trials for that submarine for the first time in 5 years. And, we had a lot of late nights, a lot of early mornings getting the boat ready to go. And it just kind of dawned on me, I just didn't really want to necessarily stick in the Navy for another, at that point, 15 years to get to retirement age. I just didn't, I was looking at the guys who I was eventually going to be, like my department heads, my XO, my CO, and their jobs weren't very appealing to me, and like the amount of stress and how little they saw their family. So long story short, I started looking for other means to supplement my income. And one of the things I stumbled upon was real estate investing. And I didn't know really anything about it. As most people do, when I first got to my duty station, I bought a house and I lived in it, and I accidentally house hacked that with a roommate for about a year and a half before I got married and my wife moved in. But I didn't know how to evaluate a deal. I didn't know if it was a good deal or not, if it was a good area, right? I bought a nice house and I had someone live there. So fast forward 2 more years, I actually started figuring out like what I was doing. And I remember the day before Thanksgiving, 2018, I stepped off my submarine for the last time. And after reading Rich Dad, Poor Dad and reading Set for Life by Scott Trench when I was underway. And within the next week, I had gone to my first meetup. 2 weeks after that, had a quad under contract in the Portsmouth area, which is about 5 minutes away from where I worked. And then by the end of January, closed on that quad, used a VA loan to purchase that. And my wife and I house hacked that for about a year before we came out here. And, we rented out the three of the units, did Airbnb on one, and then we lived in the last one. And, during that time, a lot of great lessons learned. It was, didn't seem like it was going to be necessarily a done deal. And we can get into more details on that if you want. But closed on that one in January. In February, closed on a triplex that I did with a joint venture with a couple other Navy guys. That was exciting. And then, it just kind of dawned on me that, yes, we could do these small multifamilies and eventually get up to, 100, 200 units, and kind of go through all this rigmarole. Or we could just go to larger deals right off the bat and have, 100 or 200 unit deals like at one time. Right. And, what really did it for me is understanding that, I was spending just as much time on my single family home as I was on my quad, as I was on my triplex. And it ultimately didn't really matter how many units it was, right? It's just ultimately it's more zeros and it's just ultimately more units, right? And so I was like, okay, I might as well go big. So I started, doing a lot of research into large multifamily apartment building investing, started going to conferences, doing research, meeting with people, networking. And that was all during 2019. So I had a property under contract in July of 2019. I was wholly unprepared for this property. It's just, probably the best way to say it. Didn't have literally any of the check boxes that I needed for that. Didn't have liquidity. I didn't have any capital raise. I didn't have even net worth to be able to take down this deal. Didn't have any partners, nothing. And so, right before due diligence ended, I kind of realized that I was way in over my head on this deal, and I ended up getting out of it, canceling the contract. And, it cost me only costs to travel out there and inspection costs. But it was $5,000 well spent, because it was a deal that could have very easily been very bad for me. And so from that moment on, I started realizing, hey, I need partners that are going to help me with this, right? I need people to help me, for balance sheet. I need people to help raise capital. I need people who have asset management experience and boots on the ground. All of these things that you need on a multifamily team that you don't necessarily need on a single family home, or maybe even smaller multifamily. So that team aspect kind of pushed me to start networking with specific type of people a lot more. And also realizing I was coming here to Japan and everything was going to be a lot more difficult. And so one of the things I did when I was networking and trying to figure out what I could do from here in Japan was started my podcast, the Lessons in Real Estate Show. And I started doing interviews right before I left to come to Japan. And one of the interviews I did was was with one of my now business partners, Phil. And I'd known him for about a year and a half, but we didn't really know each other. Like, we kind of ran in the same circles. But when we got done with the interview, it was like, hey, I got this deal. At that time it was about 10 minutes away from where I lived. It's like, hey, I got this 104 unit deal. Would you be interested in coming in on it if you could raise capital for it? So I was like, sure. I've kind of been digging my well over this past year and getting investors and kind of preparing for something like this. So I was like, sure. So long story short, he brought me in on that deal. We closed in March. So we've had just over a year now with that property. Raised about $800,000 for that one and closed in March. And then the ball just started rolling after that. So September, we closed on 112 units in Savannah, raised about $800,000 for that. And then in October, we closed on a 92 unit in the Hampton Roads area. And then I raised about $400,000 for that one. And, doing 3 syndications during that time period was, it was not what I expected it to be. I mean, everyone was talking about COVID and how nothing was going to happen, and all these sales were going to tank and you weren't going to get lending. It was a difficult run trying to get those properties taken down, but we ended up doing it in the end. And, during that time, I realized that a lot of the investors that were coming to me were military guys and guys who literally were just like me, active duty guys who, wanted to build a real estate kind of, empire, or have something kind of in their back pocket to kind of build upon if they decide not to retire, right? And a nest egg, if you will. And so I started realizing hey, a lot of these deals that we're doing, these syndications, to really go big and get 10, 20, $30 million deals, it's very difficult to do that and include the same military investors that I've been wanting to include, because just by the habit of how much money we make, we're not accredited investors. There's very few people I've met that are military guys that do that. So the types of deals we're able to do in a 506B are very limiting, right? So it just got me thinking hey, these opportunities for military investors are very few, and you really need to know the right person to get into them, right? That's one barrier. Also, you got to have the actual money to get into them, right? And really know what you're doing and trust the individuals. And for a lot of people, who are going on deployments, who are going underway, having that amount of research, feeling comfortable with someone to, invest $50,000 from overseas, it's not a great position that a lot of people are in. And so, my partner and I started thinking about, hey, how can we involve more military members? And so we started this fund, Mission First Capital, with the idea that we're open to all military members and both active duty and veterans. And we are unique in that we are what's called a Regulation A plus fund. It doesn't fall under the same regulations as most syndications or even most funds operate under, which are 506B or 506Cs. So Regulation A allows us to have an unlimited amount of accredited and non-accredited investors, and have much lower minimums than we normally would be able to have. So, long story short, that's kind of my life. So I'm sorry, it's a long-winded saying.
No, I think well, you've given us some great insight, right? From the very beginning, and where you are, you realized that you didn't want to be doing what you saw many of the other officers around you. So you projected yourself 12 to 15 years in the future, didn't want to do that. Then you started looking for other things. You ran across some books. You started scaling. As you started scaling, you realized that, hey, listen, this is going to probably take forever. And so you wanted to look how to fast track that. You ended up going to some conferences. And then from there, you connected with people. You started realizing what was going on. I like the fact that one of the things that you talked about is you started looking around at the people that were around you. It seems to be that those are the people that you gravitated towards and they gravitated towards you, right? It's very similar to what we do here and the people that are investing with me, right? There just happen to be a different person. It's a person who's working in IT or in telco or in pharma, and they're in sales, and that's what they're really busy as well. So it's the same kind of thing. And then because you saw your client and from the 506B and the 506C, it probably is going to be a little bit challenging, not impossible, because you obviously did it 3 times in 2020, right? So that's fantastic. And then you went to the Reg A Plus. We're going to come back to that. But one of the things I love that you said, and I just want people to recognize this, because this is something that's absolutely critical for someone who's going to be investing long distance, because you do not hit a home run every time. It is impossible. But one of the things that you said is that was $5,000 well spent, because you walked away from a deal, right? And this is one of the things that I would like for you to talk us through the mindset, because a lot of times if we decide that we're going to go forward, many people would say, all right, well, I just got to keep going forward. And then rather than that $5,000 lesson, I'm pretty much agreeing with you. It would have been a lot loftier experience, lesson, however you want to call it, but I'm sure it would have gone well beyond $5,000. So maybe talk us through that mindset, where you were, kind of how you were feeling, maybe torn, not torn, and what ultimately led you just to walk away.
Yeah. I think that's a really good point. I'm glad that you brought that up, because I think that a lot of people get this idea about sunk costs, and it's like a psychological thing that a lot of people end up happening. And this idea that, I've already spent a lot of money, I've already spent a lot of time, I need to continue putting more time and money into it to change the result. And, if you think about that situation, it just doesn't really make sense. Like, why would more money and time make a situation that is clearly not going well better, right? But the idea of sunk costs was something that, was definitely weighing on me here as well. And it's like, okay, I've spent all this time and energy, and I've talked about it with other people. And that was really the big thing, I think, for me, when I was weighing this decision to go through with this or not, was the reputation side of it. And it kind of is one of two ways. One is like, okay, I spent this $5,000, and what if I walk away from it right now, right? What if all these people I've been talking to, like, oh man, he, was all talk and no action, right? But on the other hand, it could be like, okay, this guy actually got under contract. He got to due diligence, right? He got to the end. And what if I couldn't actually close on it, right? What if I couldn't raise capital for it? What if I couldn't do all of this, right? And now I've made it, a name as someone who can't close within that market with those brokers, with the, the people that I've raised capital from, right? So in my mind, that was a much worse situation to be in than where I was starting, which was relatively nobody at that point. Like, no one really cared what was happening with me. So that was a calculus in my head. And, it just the gravity of the situation of taking down a large property like that, a multi-million-dollar property by myself, was just, it was scary. It was really scary to me. And it made me really realize that this is definitely a team sport, and I need to have the right people on the team. And I was ill prepared to really take down that property from a number of different aspects.
Yeah. So you feel like you were ill prepared, but at least as we're talking through it now, right? Just the fact that you were thinking about why would you spend more time and energy and effort in something that is clearly making you probably not even sleep well at night. And so just the fact that you had that fortitude to recognize that, hey, look, this is one that I just need to walk away from. It was a $5,000 lesson, right? I think that is great. And then I want to go back because one of the things that you just talked about, which is key, is especially in those of us that are in this long distance world, is I love to talk about hashtag teamwork makes the dream work, right? And so let's come back to that, because as you're in Japan and you're investing in the state of Virginia on the East Coast of the United States and in Georgia, and you're actively looking at other places, right? You can't do it. Like I'm living in Barcelona and I clearly don't operate all of the properties that are in my portfolio, right? And so maybe talk us through a little bit about that, how you went about building your team or reaching, I mean, you talked a little bit about before, but maybe if you could dig into it, like what specifically were you doing to actually realize, number one, I need certain people on my team. And then number two, the steps that you took as someone who is a long distance investor, who is an active investor, to actually start building the team and get what you needed around you.
Yeah. So I think the first part is you have to be educated, right? I think if you're going to go about finding partners, you need to know what you're talking about, first of all. So you don't get swindled. And two, you understand what you have to offer in a partnership to make it actually worthwhile, right? I think too many people approach partnerships from a purely transactional basis rather than a true partnership kind of thought process, right? People approach it more from what can this person do for me rather than more like a marriage. I think that a partnership in business should be like a marriage, right? I didn't marry my wife because of the things that she brought to me, right? I married my wife because I love my wife and she makes me feel things that, no one else has made me feel, and, love of my life and so on and so forth. But they're intangible things. And I think that that's really important to understand from a partner standpoint is, do you have the same values and principles as a partner you're looking to get with? Do you have the same ideals? Do you connect with this individual? And then you can say, hey, they fill this gap that I'm not good at, right? Or I can bring this to the team, right? I think that's happened. So I've seen it happen so many times on partnerships, and I've been a part of partnerships that someone did not do the proper due diligence, and me included. I'm definitely fallen foul of that a few times, and so I really think you need to understand the person that you're getting into bed with, because that's really what is happening. You're getting into bed with someone, and it just happens to be in a property, and that could be many years of you having to deal with the individual.
So actually, I'm not, and I am going to cut you off here because I think this is really, really key. And so for those people that don't know what they don't know, you're sharing with them right now. You're sharing with the entire Going Long family something that is absolutely golden, right? And because they don't know what they don't know, help them understand, like, how do you figure out when you're doing due diligence on someone that it could potentially be the right or the wrong fit?
Mm-hmm. So, I'm a strong believer in using instincts. I think that, particularly in the military, my instincts have served me really well with being able to judge people, or just, get a sense about someone. And so if your instinct is telling you when you're talking with this individual, when you're looking at him in the eye, when you're having dinner, when, however you're interacting with this person, that something just doesn't feel right, well, I would trust that feeling. It serves us well in a lot of different ways, and it's an evolutionary thing that's been there for a purpose, right? It's to prevent us from getting harmed or to prevent us from getting into a dangerous situation. So that would be the first thing I would say is trust your instinct. Two, do your due diligence outside of just meeting the person, right? If someone is, I would just say that real estate investing is a very small world. You run into the same people over and over again. And especially if you get into like a smaller niche, like military real estate investor, even smaller. So chances are that someone has worked with that individual before, right? Someone has had a good interaction, a bad interaction, right? There's probably a social media presence or an online presence. There's something that you can look up on these individuals. So just Google the individual, do your due diligence on that person before you really get, into bed with them. But that would be the two things I would say is do your physical due diligence on them, like Google them, talk with people, do interviews, just like you would be vetting a property management company or a vendor or a contractor, right? You're going to get all of this background research done before you actually hire them to do a job. I mean, it should be no different for a partner.
Yeah. Okay. And I love that. And so just everything from being able to connect with them to go online with them, because some people are still not able to travel. And then, like you said, just those instincts that have been around for millions of years in the individual are also something that's important. And don't be afraid to use Google. So, which I think are great things. Hey, by the way, I forgot to say something to you at the very beginning, and I'm just thinking about it now. I want to thank you for your service, my friend. So I completely forgot. I got right enthralled into the conversation. So thank you very much for your service, man. Appreciate it, Anthony. And so you made a transition, right? And you went from single family to multifamily because you're like, well, it's the same energy that I'm using anyway, right? And so, and you're absolutely right. You also said something that I think will scare some people, and I always like to kind of dig out the fears that could happen behind us, because you're talking about more zeros, and so more zeros definitely means that, hey, you know what? There's more capital, and if something happens to someone, it's probably even means that there's more of a risk and there's more of a challenge on your side. So, as you thought about the growing aspect, what were some of the concerns and fears that were beyond not having a team around you that were kind of like, is this really the right thing to do to go from single family to like multifamily big apartment buildings?
Yeah, I think that's a really good question. So I would say the first thing would be this idea of an imposter syndrome, that, I don't have any experience in this. I've never done this before. I don't know how to do this. I'm not an expert in this. The limiting beliefs that we tell ourselves in our head that ultimately are not true. Those I think there are things that were stopping me at first from really digging deep into it. It's like, who am I to ask an investor for capital, right? And that's actually not a good way to put it. You're providing an opportunity. You're not asking for capital. You're providing an opportunity. But who am I to talk to this individual with some sort of authority, right? Who am I to, take down these properties, right? And, to that, I would say, who was Jeff Bezos to start Amazon 30 years ago? Who was Elon Musk to do everything that he's done with Tesla and with SpaceX? I mean, everyone who's ever been, successful and is successful started from nothing, right? There's not one person that can say that you can tell me is an overnight success that has maintained their success. Most people that achieve something like that are very quickly return to their previous state. Look at lottery winners. Look at people who suddenly come into a large fortune. It doesn't go well for them, right? So I think that to limit yourself to only being an expert in the things that you're good at, I mean, you're never going to grow into something else, right? There's always going to be something that's going to make you uncomfortable if you're willing to grow into it, and if you're willing to put in the effort and the time and move forward. But the second thing I would say on that, in response to that, is, and this is something that really helped me get over my initial fear when I was putting out Facebook videos and starting the podcast, and it was like, who am I? Is that there's always someone who is one step behind you in the whole process, right? There's always someone who is looking to buy the first house when you already have a house. There's always someone who's looking to buy the first multifamily after you just bought your new one, right? There's always someone in the track that is looking for advice and looking for help and looking for, a proof of concept that someone before them who is just like them is achieved something that they've just done. And I think it's really key to understand that when you're getting started, is that it may not seem like anyone cares about what you're saying or you have a lot to say, but it really does make a difference in someone's life. You may just not see it because there's someone who would resonate with what you're trying to say.
Okay, and that helps a lot, and also being able to realize that fear is part of this whole process. And if you're unfamiliar with something, then you need to become familiar with it, and you just need to continue to surround yourself with people that are going to help you feel more comfortable. Doesn't mean they're going to tell you the things that you want to hear, but they're just going to help you to become more familiar with the process or a situation that you've never seen before. So I appreciate you also sharing that perspective, because it always helps us. Because I there's so many people that talk about all the cool stuff and all the great stuff, and they forget to tell the stories that actually are making us afraid, which if we're still afraid, we're paralysis analysis, as they like to talk about. So one of the other things, so you're clearly in this long distance investing category, like I like to call it, right? And so you're in Japan, you're going to be there for a couple more years, and you're not just in one place in the United States, you or your team. So most people say, well, I'm just going to invest in, like, you could just, if you were from Kansas City, you invest in Kansas City and you stay there, and just because you've got everything there. And so you and your team are making a decision to go to various different locations. So talk us through, just like, I guess at a really high level, why do you opt as a team to go to various locations versus just staying in one?
So I'll preface that by saying that we have 7 people on our team right now with Mission First Capital, and only 3 of them are located in the same area. We have 3 of them are in the Norfolk area. We have one in Maryland, one in Missouri, one in Tennessee. And the reason I bring that up is that instead of trying to focus on trying to find people in a particular area, you should focus on finding the right people and just let everything else kind of fall into place. And I think that's really been huge for us, is that we have this decentralized system where, we get together and we communicate and we talk, not face to face because we can't do that, but we talk through other means like Slack, through our morning meetings that we have, through our Zoom, our weekly Zoom calls, things of that nature. So I just wanted to say that, because for a lot of people think that you have to have a team that's local to an area and that you have to meet every day and you have to constantly go look at these properties yourself. Like, I haven't looked at, the 3 properties we bought last year. I have never physically seen 2 of them. And I don't know when I'm going to go physically see them, because I don't know when I'm going to be back in the States again. Yep. Right. So that was a huge leap of faith for me, is to trust my partners enough to take down those properties, without seeing them in person. But the reason that we kind of spread around into different areas is because I think you're going to find that, particularly now, depending on where you live, it's a very, very, very hot market. And properties are going for insane prices that just don't make sense. People are paying it, and which further drives up cap rates because people are willing to pay. And it's just a vicious cycle of insane amount of money going around out there. Right. But if you're trying to stick to local and you live in like California, or you live in Atlanta, or you live in, Florida, or Baltimore, gosh, it's going to be very difficult for you, especially starting off, to try to find a deal that makes sense for you when it doesn't make sense to buy in those particular markets, because everything's just insane, right? Yeah. So we're starting to see that in the Hampton Roads area as well right now. And so I opted to, get in with another partner and get into the Savannah deal, because Savannah is still relatively untapped, right? It's not like in Atlanta where there's everybody there trying to invest in it, right? So I think, one of the things I think that's really awesome about being able to remotely, be overseas and remotely look at these properties is that I can view everything I need to know about a property on the internet. Outside of physically going and doing an inspection, I can do everything from sitting right here at my computer. And so why would I necessarily stick to a particular market when it's not working for me just because it happens to be in my backyard, right? I want to pick a market that makes sense for me as a cash flowing market, or makes sense for me as an appreciation market, or makes sense to me to be able to buy properties for cheap, to be able to flip. I mean, whatever your strategy is, there's a particular market that fits that genre for you. And so I think you're really limiting yourself by sticking to one particular market. One, because you're probably going to find it's hard to buy in particular markets. And 2, you want to diversify. If something happens in that market, Like, for example, let's say in Norfolk, the military just decides to shut all 10 of their bases. Unlikely, but decides to shut all 10 of their bases, and they move everybody out to, I don't know, like Missouri or Tennessee, right? That's 250,000, 300,000 military members that are now gone from that area, right? That would be disastrous for that area, right? And if you had all your properties concentrated in there, that would obviously be really bad for you. But if you had two properties there, you had some in, Atlanta, you had some in Texas, right? You had them all over the place. Those other properties can kind of buffet what happened in that particular market.
And so I love that you bring that out, right? And also to diversification of job. And one of the things that you said earlier, and I know some people are probably listening, and when you talked about the cap rates, meaning that things are becoming more expensive, that the cap rates are actually depressing or compressing. So meaning that there is actually a lower cap rate, which makes things more expensive. Which I love the fact that you talked about that. But just in case people are like, you said, oh, the cap rate's going up. Well, he meant the price is going up. So, which is great. And then, and I guess this is one of the advantages, because you talk about it, and I love that you mentioned that, Anthony, because when we're remote by nature, you're in Japan, I'm in Barcelona, and we both invest in the United States. Like, the remote work and lifestyle is just that. Me also having an IT background, I've been doing remote work and Zoom for the last 7 years, so it's not anything that's net new. So love your mindset and being able to find the right people, get the right people on the bus, as Jim Collins says, and not worried about making sure that you can micromanage everybody being in the same office. Like, love that mentality. And I'm sure that is another one of the reasons that you all continue to grow in a very nice, profitable way. So I have a question for you as well before we get to, well, I have two questions. The one, I want you to talk to us, because you would actually be the first person that can talk to us about the Regulation A+. And maybe talk to us a little bit about, because maybe some people haven't heard it, like they know what a Reg C and a Reg 506C and 506B are, but Reg A+, like, what is that? And you talked a little bit about why you would use it earlier, but just give us some education around Reg A+, please.
Sure. So I'll start with the Reg D part of things. So when people talk about 506B, 506Cs, they're talking about the Regulation D. Yep. Which is a private placement, is what it's referred to in terms of the SEC regulation. And those are exceptions to actually have to register with the SEC, because, as I'm about to tell you, it takes a very, very long time to actually have a public or have a private offering be accepted by the SEC. Right. So we have these exceptions to allow for, real estate offerings, something like that. Takes a matter of weeks and months rather than, a year or so to get approved. So that's what typical syndications are like. And then you got crowdfunding, which is, like your crowd rise, and you go up there and, people throw $5 in, you end up having 1 million people help raise $5 million. Right. And that's all grand and dandy, and it has its own limitations. And then you have the Regulation A+, which is also called a mini IPO. And it's mainly, actually surprisingly used majority by real estate investment companies to create real estate investment funds like this. But the idea is to have a structure to be able to raise capital and build a company out, right? So, someone who wants to start like an electric car company can do that through a Regulation A+. And there's a lot of people who then go on to have an IPO and become a public company. But we are a publicly offered SEC registered company, right? Which means that we have to go through all of the steps to actually get approved by the SEC. And it's a lot of steps, a lot of money, a lot of time. We're at about 9 months ongoing with this whole process. And, here at the end of March, we're still waiting to get approved by the SEC. But it's also a lot of money as well. But it gives us a lot of advantages that you're not going to find with a syndication. Like I said, it gives us the ability to have an unlimited amount of accredited, non-accredited investors while still being able to generally solicit. So we can put up offerings, for Mission First Capital on Facebook, on a billboard, all over the internet, right? Take out a newspaper ad. And we can also set what our minimum is going to be. And so I think a lot of people set higher minimums for syndications because it's easier to deal with 30 investors than it is to deal with 100 or 200 or 500 investors, right? But it's all about having the right systems and processes in place, right? If you have all that set up, it's everything's smooth, you can have a much lower minimum. So for us, it's $5,000, right? So two of those barriers for military people specifically are out of the way right off the bat, right? We can have non-accredited guys and we can have much lower minimums. And so that's kind of the basis behind, what a Regulation A+ fund allows us to do. It's obviously a lot of money and time and effort on the front end to, go through all the different steps, and you have to have a broker dealer, and there's a lot that goes into it. But it gives us a lot more flexibility for the investors we can bring on.
All right. Awesome. And so that's really, really helpful. And I guess what I want the entire Going Long family to think about is just listen to what Anthony just mentioned. Like they're going to take more time and invest more of their capital because that's the right thing to do for their ideal client. Like that, because you're doing these things because you know that you're going to be able to best serve the person that you're looking to serve. Right. And so it's just very consistent and coherent with the things that you've talked about before, which once again is going to continue to help you to move further faster and serve more of the people that you're looking to serve. So commend you once again for that as well, Anthony. But before we get into the Going Long Final Three, I cannot not ask you this question. So I've got a question that I just got to get off my chest, right?
Sure.
Can you tell us a little bit about how you are going to get to the point of opening this really cool, awesome dream of yours, which is Pinto's Beans, Books, and Brews? What is the path to opening up your dream store? Talk to us about it.
Oh man, it's been quite a while since we've been thinking about that. I actually remember, I think it's a few months ago, my wife and I were sitting at a bar, and I literally took out a cocktail napkin and drew it out, like what it was going to look like. I drew like an actual dimensions of this is where the stage is going to be, and this is where the bar is going to be, and this is where all the coffee stuff's going to be. So it's really funny you mentioned that. Gosh, man, I mean, the path is going to be, once we get back to the States, we're going to start looking at property, probably in the Philadelphia area, which is where my wife's from. She wants to be close to, to her family. And, it's got to have a few different dimensions to it, right? We're thinking it's going to be a bar in the bottom, which is a coffee shop during the day. Mm-hmm. And there's a stage in the corner where we'll have local bands come on. And then there's a upstairs section that's all like a big library, and there's books, and it's a big bookstore, and you can just sit in these really comfy couches or sit at a table, and you can read these books with big, open windows with sunlight coming in. It's a quiet, quaint place to just sit and read a book. Probably don't want to do that when the live band's going on, right? But that's the idea behind Pinto's Books and Brews. So I think the first step is getting back to the States first.
Yeah. No, and listen, once again, clarity of vision. You already know the location. You're describing it perfectly for us, and I'm sure you're gonna get to that. When I saw it, I was like, yeah, we got to ask about this, because this is just another right. Because I think this is a really important point, right? We kind of are joking a little bit about it, but this is not all about money. Like, you are talking about something that is getting you and your wife closer back to her family, which is something that is a quality of life thing. You have this dream, this goal of something that you want to be able to create because it's going to bring you personal happiness. At the same time, I'm sure you want it to be profitable, but you're not just talking about the money. And so this is just another thing that I think is really, really important. And I kind of wanted to, before we go into Going Long Final 3, which is going to be a lightning fast Going Long Final 3 today. Sure. And as you know, so here we go. The thing is, actually, Anthony, I never asked the Going Long Final 3 unless you tell me you're ready for me to ask. So are you ready?
I'm ready.
I knew you would say that. Here you go. So we started with you in Japan. And normally I say now we're going to bring it back east, but I guess now we're going to bring it back west, because I would love for you to help us understand, what is your favorite European city, either that you visited or still on your bucket list to visit?
I would say Cinque Terre.
Cinque Terre. Oh, nice. Italy. We love that. We got another vote there. Italy gets so many votes. Like, it's just wonderful. Cool. So the other thing is, like, you're a very successful person. And the thing that successful people all have in common, Anthony, is that all successful people have only made one mistake in their entire I get that wrong every single time. Every single time I get it wrong, right? It's not one, it's many, right? And so the thing is, make many, many mistakes all the time. And the important thing is not the mistake or the learning opportunity or however you want to say it, but what is the one lesson that you would pay forward to the Going Long family?
I would say that if you're not suited to do a task, find someone who's better suited to do it. And this is probably going to lead into a later talk, but I would say find your who, not your how.
Love it. Find your who, not your how. And this is classic. Love that. And it definitely is one that goes like to the bank, because that is golden. And then the last of the Going Long final three, Anthony, what book? You already given us a couple you talked about in this conversation, but what book would you like to leave us with in terms of a recommendation for the Going Long family?
Yeah, absolutely. So I would say Who Not How. It's a book by Brad Sullivan. Super short read, really great book. But since I already mentioned that, I would say The Secrets of the Millionaire Mind by T. Harv Eker.
All right. Secrets of the Millionaire Mind. Perfect. Well, you've left like 3 different books for us, so I'm sure, but we'll leave Secrets of the Millionaire Mind in the show notes. So listen, man, I mean, I just think about from the very first thing that you're talking about, aside from me being a guest on your podcast, but you start talking to us about, being also too from Kansas City and having the opportunity with our military to move and live in different places. And then from there, not wanting to kind of project into the future, you decided to take your own path. You've had a chance to live overseas, and as you're living overseas, you're like living the Going Long philosophy, right? Continuing to build your team, add value to so many different people that are your clients, and you're adapting your business to best serve your clients and your investors, which I think is absolutely phenomenal. And you've given us so many different inspirational things. Even you've talked to us about your dream restaurant or your dream store that you're going to build out. And so, Anthony, I know so many people have been inspired by the conversation that we've had today, and they're thinking, oh my gosh, you know what? I'm going to go to Japan, or you know what? He's a military guy like me, and he's building people or building business and all these kinds of things. And so help us understand, what is the best way for the Going Long family to get in touch with you and your company and find out more about what you're doing?
Sure. So I'm pretty active on Facebook, so you can find me on Facebook. I also have a LinkedIn as well. Or if you're in the Tokyo area, you can just hit me up and we can meet in person. Now that we can actually do that again with COVID. But you can also check out our website, Mission First Capital, www.missionfirstcapital.co. You can check out, me and my partner on there, watch the videos we have on there, educational stuff, a blog, and then also find out how to invest.
All right. Fantastic. So everybody take action and listen. And when you reach out to Anthony, do us a favor. Let him know that you saw him here, because you're probably watching the video version, or if you're running on the treadmill or you're in the kitchen cooking or something like that, just let him know, hey, look, you actually heard the conversation here on the Going Long podcast. It helps Anthony. And especially if you're going to meet him for coffee in Japan, like that would be really cool for him to know, like you're not just reaching out and stuff like that. So, listen, Anthony, I really appreciate you investing your time with me, with the entire Going Long family, man, and thank you very, very much.
Absolutely. Thanks, Billy.
Yeah, sure. No problem, man. And listen, if you give me just like a couple seconds, I just want to say a couple words to the Going Long family really quickly. So listen, Going Long family, Anthony just left so much knowledge with us here today once again. And so you have an opportunity to do something very, very unique. It's share today's episode with like 2 or 3 other people at least, because you can make a positive impact on their lives through the words that Anthony has shared with you today. And you can be that person that continues to help move your friends, your family forward. And by doing that, you're also bringing more people to our Going Long family, and we're surrounding ourselves with like-minded people. And while you're doing that, if you haven't already, make sure that you take just a couple seconds to leave us your honest review. Like, what do you think about what you liked in today's conversation? What are the things you would love to know about? Ask a question. I go through every single one of these reviews. It's something that we take very, very seriously and want to make sure that we continue to bring you quality content. And so, leave us an honest review. I know I'd love that. I know Anthony would love that as well. And I'm really, really looking forward to welcoming you back to the very next conversation. And until then, I want you to go out and make it a great day. And thank you very much. Wow. Don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.